So good evening, everyone. We are towards the close of our revision classes. Rather, we are in the last part where we are going to deal with the statutory updates. So first, asking you your questions, your doubts, if any, relating to the subject entirely, any topic, you can put it across. We'll first discuss your doubts and I'll take up, then I'll take up your statutory updates pertaining to the January 2026 exams. Yes, students, waiting for your inputs. No one? Okay. Today, who can help me reading these statutory updates? Because I want to take it more in detail. So if somebody can help me reading it, it would be great. Yes, anybody can help me reading? Not possible? Okay. So I'll start. Now, when we are preparing for January exams, it is important to know up to what date updates we have to prepare for the exams, because today we are in the month of November. Till date, you have multiple updates. However, whatever updates have been issued and have been made effective. Now, this is also interesting in indirect taxes. They may have been issued earlier, but are they made effective? So those updates in the CGST or IGST portion, or even in the Customs Act and the Customs Tariff Act portion, which have been made effective. Made effective means applicable up to 30th of June 25. Only those would be relevant for your January exams. So the general rule, students, you should know is that we follow the 6 months rule. So immediately prior to our exams, we check the updates that are there in past 6 months immediately before our exams. Only those are effective, those are applicable for the purpose of the upcoming exams. Further, the amendments made by the Finance Act are also applicable. But again, the same rule, those amendments made by Finance Acts which have become effective. So there may be a possibility that some amendment is made but has not been notified to be effective up to 30th of June. So they may not be applicable. Further, Finance Act 23 has already been made effective, so it will be fully applicable. Finance Act 24 is applicable again to the extent it has been made effective. So amendment made by Finance Act 23 made effective till this date are applicable. It may be noted that amendment made by Finance Act 23 in 9A, B, C of the Customs Tariff Act, 65 of the Customs Act, new section 65A have not become effective and thus will not apply to your January 26 exams. Similarly, amendment made by Finance Act 19 in these sections have also not yet been made effective, so they will also not apply. But don't worry, whatever has not been made effective is not covered in your study module, so you need not bother that you have to go and do some markings in your study mod. That is not required because only those which are applicable and effective, I'm talking about the old ones, which have been made effective are only notified or specified in your study material. Then the subject matter of the first part, that is GST of the October edition, is based on the provisions of the Act, both CGST, IGST, amended by the Finance Act 24, including those notification circulars which were issued up to 31st of October 24. Now, the notifications issued between November 24 to June 25 are what are covered in this update. So if you are following the previous module hosted on our website, which is our October edition, so in that you have to add these statutory updates that we are going to discuss now. Fine. So as all the amendments by Finance Act 24 and Finance Act number 224 given at the end of the relevant chapters have become effective, you are advised to refer to those amendments for your January prep. Now, the contents of part 2, that is customs and FTP, again in our study material is as per Finance Act 224, including significant notification circulars which have become effective up to 31/10/24 and all the other amendments notifications from 1st November 24 to 30th June 25 is what we are going to cover here. So in short, your October module plus what is covered here is what is your total syllabus for Jan 26 exams. So that is how you can understand and keep this in your memories. Now, starting with the first amendment. Now, besides explaining you the amendment, I'll give you the background also so that it will be helpful to you when you are handling the case study type of questions, the MCQ type of questions, because all these amendments will not be asked theoretically at this level. You will be required to apply the amendments in the case study scenarios or in the MCQ type of questions. So I'll give you the backdrop of this. So this will indirectly also help us briefly revise some relevant provisions of the entire portion again. Plus, you will also understand how these amendments are connected to the respective portion of the Act. So now we are talking about this portion, which is dealing with whether a particular type of money received or money charge will be supply or not under GST and whether GST would be attracted or not. So it is regarding applicability of GST on penal charges. Now, what are penal charges? So penal charges are penalties, fines, which are levied whenever there is some mistake committed, whenever there is some breach of some condition, breach of some requirement, some regulation. So in that case, the authority, who is your governing authority, is empowered either by some act or by the contract to impose penalty. Now, this was a long, prolonged dispute that whether penalty recovered would be leviable to GST. There were diversified AAR, AAAR rulings, and there was a lot of diversified views across. So now it has been clarified already, not now, earlier, that where as a part of contractual obligation, you are required to pay some penalty or liquidated damages. Why? Because you could not comply with the contract conditions. In that particular case, the penalty, the liquidated damages, the fine will not be regarded as supply. But where there is a specific contract to do or not to do something, and for that contract, you receive some amount, that amount will be treated as a supply. So the general rule is that whenever there is any penal charges imposed as a part of your contract of the original supply. So let us say we contracted for providing professional services. You contacted me and I agreed to provide you professional services. But in this relation, there was some shortfall, there was some non-performance, because of which I levied some penal charges. Now the question is whether this penal charges will attract GST. The general rule or the answer even before this clarification is no. Now the question is then what is this clarification dealing with new? Because already I explained that for such penal charges there is no GST. Now this particular matter came up because there was a query raised to the council on one particular type of penal charges which are levied by regulated entities. Now, firstly, what are regulated entities? So, regulated entities are those entities which are regulated by some act or by some law like the banks, the NBFCs. We all know you have specific acts regulating them, plus they are also regulated by the RBI. Now, whenever any entity is being controlled, monitored, regulated by some other entity, this entity will be called as a regulated entity. So here we are talking about banks. Now, there was an instruction given by RBI in 2023 asking the banks to discontinue the use of penal interest for non-compliance with loan terms. So what is that? You all know this, that if you do not pay your loan installment on time, the bank used to impose an extra amount called as penal interest. However, RBI gave them an instruction that you should discontinue this practice. So the bank discontinued this. Now, importantly, they discontinued charging penal interest, but instead they introduced a new levy whereby for non-compliance of loan terms, they started charging something called as penal charges. So simply what they did was smartly, just to comply with the RBI instructions and also continue getting the amount, they just changed the terminology from penal interest to penal charges. Now, the question that had come up for consideration is whether the penal charges which are levied by the banks and which are in the nature of payment or consideration for tolerating an act. What is this act? That the person who has taken loan has not complied with some of the loan terms. So bank has tolerated this act of non-compliance. Now, whether this will be liable to GST. Now, firstly, the old circular which I mentioned, which had already come some time back, already mentioned this is circular number 178, which was issued in 2022. It had already said that liquidated damages for breach of contract is not a consideration for any type of service. Which service? Tolerating an act or tolerating a situation. So it is not a consideration, and hence this circular had already clarified that there can be no GST on such toleration. So first point is that this is the old circular which I was mentioning at the start when I was explaining this particular point. So in this circular, it was clarified that any type of penal charges for liquidated damages or for breach of contract is not a supply. Why? Because it does not fit in the definition of consideration. Further, it said that they are amounts recovered to deter such act. Means, in fact, it is not an amount or consideration for doing the act. In fact, it is more like an amount so that you do not do this act. So many times, why do you have penalty clauses everywhere? So that you don't do something which that particular law or which that particular body does not want you to do. So it is not a consideration, because consideration is something for inducement of a supply. In fact, here it is imposed so that you do not break the laws. Here it is imposed so that you do not override any of the terms and conditions. So this was what was clarified in the previous circular. Point number one. Point number two, what it further said, such amounts are for preventing breach of contract or for preventing non-performance and thus mere events in the contract. Now this terminology is again important. So what they said was that all these amounts which are charged, they are charged for preventing someone to breach the contract or preventing someone from not performing a contract. So these are not actually any type of supplies because they are mere events, not transactions. The essence of a contract is in its performance and not in its breach. So any contract which is entered into with the intention that you will perform your promise. You will do whatever is contracted to do and not for not doing something. So a contract's objective is making you do something. So that is why when you don't do something and the contract clause imposes some penalty or levies some charges, that cannot constitute a consideration because not doing something in the contract cannot be a separate supply. Hence, it was already clarified, which I explained at the start, that penalties which are part of the contract clauses for breach of contract for non-performance, will not tantamount to consideration as there is no supply and hence there will be no GST. Now, after this change was brought by acts and this query had come that whether penal charges will be constituting a supply, the answer you'll get from the previous circular. However, to avoid any type of ambiguity, again a new circular was issued in January 25 and this circular clarified the same thing. What? Penal charges levied by these regulated entities in compliance with the RBI directions are essentially in the nature of charges for breach of terms on contract and hence it has been clarified that no GST is payable on such charges which are levied by the regulated entities. So, in compliance with, or I'll say in line with the original circular, the clarification is issued. So, in effect, the clarification says the same thing which the previous circular has said. So, there is nothing new, there is nothing special in this particular point, but just more of a clarificatory point. Now comes a very important part. Now, again, what is the background of this? We all know that there is something called as reverse charge mechanism. What is a reverse charge mechanism? So the general rule is that in case of a supply or in case of a transaction, the supplier is required to pay the tax. This happens in 90% of the cases. We also call this as the forward charge mechanism. However, the law has envisaged some specific transactions, some specified or I should say notified supplies where the tax would not be paid by the supplier but by the recipient of that transaction. So wherever the law under section 9(3) or 9(4) of the CGST Act or 5(3) or 5(4) of the IGST Act has put the responsibility of making payment on the recipient, we call those transactions as the RCM transactions and there is a specified list given under notification number 13 bar 2017 and this list which was originally given at the start of GST law is constantly undergoing amendments. Now some amendments of whereby new transactions are added on which RCM will start applying from a particular date. Second, the second type of amendment is that for original entry items, some changes are done, some conditions are tweaked, or some additional conditions are put in to make RCM applicable. Now, the interesting point is what is the ideology? What is the logic of RCM? Answer is that RCM is introduced or RCM was introduced originally at the time of service tax itself. Now, what was the reason? See, where the law provides that tax has to be levied on a particular transaction, the law also has to provide as to how this tax will be recovered. Who is responsible for making payment of tax? Because until and unless the law makes it obligatory on one of the parties to pay the tax, tax will never be paid or recovered. Now, in such cases where the law made a particular party to pay the tax, the question was who should be that party, the supplier or the recipient? Here comes a very important point which is called as administrative convenience. What is administrative convenience? See, law will be made in the parliament. The parliamentarians, which is also the legislative body, will determine what will be the provisions of law when a particular tax would be imposed on what rate, what value, etc. But this has to be implemented on the ground by the executive government, which comprises of the departments, the GST department, customs department, income tax department, etc. Now, so the executive government is the person who is responsible for implementing the provisions of the act and in this regard for collection of tax. Now, when it is the administrative government which is responsible for collection of the tax, there comes another point which I just mentioned, administrative convenience. What is this administrative convenience? Administrative convenience is that the law should be so designed that it should be practically possible for the executive government, that is the officers, to implement the law. Now, when we talk about the person who is responsible to pay the tax, who is this person? The answer is the person should be such a person from whom it is convenient, or I should say it is easy, it is practically possible for the government to do recovery. That person is the person who is liable to pay the tax to the government. Now, if you observe any transaction, in a transaction, the supplier is generally a businessman in majority of the cases who has a fixed place of business, who has some setup, some establishment, and the customers are either non-business, are either individuals who are buying it in their personal capacities, or maybe very small businesses who may not be having proper accounting, proper setup for preparing and filing their returns. Now, in such a case, the law would obviously want the supplier to be the person who goes and pays the tax, because tomorrow, if the law or the executive government wants to do any assessment, wants to do any scrutiny or checking, it will be easier for them to go to the shopkeeper, to go to the factory, that is to go to the business or the supplier. Because again, in a transaction, you'll find that one business and thousands of customers. So again, from the perspective of quantum also, it is easy that you go to one person, from one person you'll get details of 1,000 transactions rather than going to 1,000 buyers. Secondly, this person is having a setup, this person is having a place of business from where this person is operating, so you know where to go, you know where to find this person. When it is the consumer, the buyer, it is very difficult because the buyer may be on the go, the buyer may be not having any proper place where you can go and catch hold of the buyer. Hence, considering all these points, the administrative convenience concept says that tax should be collected from that person, or the responsibility to pay tax should be put on that person from whom in future you can do recovery, whom you can catch hold of, who can be held responsible. On these lines, as I said, we had the forward charge mechanism where supplier is made responsible. However, as transactions expanded and as new entries started getting added in the service tax, they found that in few transactions, the situation was reverse. That is, it was difficult to catch hold of supplier, but easy to catch hold the recipient. Again, for the same two reason. First reason is quantum. Suppliers are multiple, recipient is one. Second is suppliers do not have a proper place of business. They may be on the go, but recipient is a established person having a proper setup, a place where you can go and catch hold. So considering both these points, the concept of RCM was introduced in the service tax, which got continued in GST. And now the list that we are having, why is this list being modified? For this, I gave you this backdrop. So these two reasons. So wherever the government find that, okay, it is easy to catch hold of recipient rather than the supplier, they will put that transaction in the RC. Now, what are the amendments in this relevant to our exams? So first entry was relating to provision of sponsorship service. Now, what is sponsorship service? So let us first understand, because many times people mix between advertising and sponsorship. So there is a difference. Also, there is a difference between brand ambassador. All are different types of services. Now, what is sponsorship? Sponsorship is, so right now, let us say we just had the Asia Cup, and after that, very recently, we had our Women's World Cup. Now, this is an event, the Asia Cup, the Women's World Cup, these are events. Then you have other events, let us say at local level, at your city level, that is Dandiya, which is Navratra. In this, many people come at one place. Now, what businesses have found is in order to create uh, a goodwill of a business, what these businesses do, they hammer their name, the name of that company, the name of that brand in the minds of the people. How? They sponsor the event. What is sponsoring? Sponsoring is that whenever the name of the event will be taken, like Asia Cup, it will not only be Asia Cup, it will be preceded by the name of the sponsor. Like if I give you another example of IPL, because recently we concluded the auctions of IPL. So sometime back, any IPL tournament was called as DLF IPL. Then of late, it was Tata IPL. Now what is this? The event is IPL. But every time you take the name of the event, you have to take the name of that business, of that brand, who is your sponsorer. So sponsorer is that person who gives you money, and against that, you are using the name of that person, the brand or the company name, every time you are talking about that event. Similarly, you have many shows like the Kapil Sharma show or so many shows on television where you say that this is sponsored by. Now, people are bored hearing the same word sponsored by, so they use different words. This is powered by, this is empowered by. So they are using fancy terms. But what is the point? So sponsorship means your name gets attached to that particular event, that particular web series, that particular serial. So that whenever that serial's name is taken, even in marketing, so whenever that serial will be marketed anywhere, like even on hoardings, it will not be only the name of the serial, even the name of the sponsor will come. So automatically the name of the sponsorer gets marketed, highlighted. And for this, the sponsorer has to pay a good amount to that particular event sponsor, event organizer, or to that particular producer. Now, this sponsorship service. Now, first understand in this example, who is the provider of this service and who is the recipient. The recipient is the business, like Tata IPL. So, Tata is the recipient. Who is the provider? Provider is the organizer of this event. So, it will be BCCI. Second example, when you talk about the Kapil Sharma show, if let us say it is powered by Patanjali, like some time back it was powered by Patanjali. So we used to say Kapil Sharma show powered by Patanjali or sponsored by Patanjali, whatever. Now, in fact, there were multiple, not single, there were multiple sponsors. Now, in that particular case, the point is, Hmm. Now in that particular case, the sponsorer, that is the service provider, is the producer of that event, that particular Kapil Sharma show. And the recipient again is the business, that is Patanjali, who is the business whose name will be highlighted by Kapil Sharma every time the Kapil Sharma will take name of a show. So that is how we have this service. So what is the nature of the service? The nature of the service is sponsorship. Now, most important, when RCM will apply, keep in mind the logic, administrative convenience. So they are saying where the supplier is a person other than a body corporate. So if the supplier itself is a body corporate, it will have a proper office, registered office. The name of it will be put on the MCA portal. So it will be easy to identify and catch hold of the supplier. So at that time, we don't want RCM. We want RCM where this supplier is not a body corporate. Many times, the person who are organizing the event may be individuals, maybe some trust, maybe some body created for that only short period of time, that is of that event. Like in case of Navratras and all these, many times Navratra organization is done by maybe one individual or maybe group of individuals, and you may not even find them after the Navratra is over. So in such cases, it may be difficult to catch hold of the supplier who is the supplier of this sponsorship service, because the supplier is not a body corporate. But if the supplier itself is a company, is a body corporate, then no problem. Let the supplier pay tax under forward charge, we have no problem. But where it is not a body corporate and The recipient is either a body corporate or a partnership firm. So obviously, again the same thing. We will be able to catch hold only when the recipient is also a registered person or has some office or place of business. So they have put a condition that the recipient should be a body corporate or a partnership firm. So what is the amendment? Earlier, these words in red were not there. So supplier included any person. Now they are saying supplier will include only that person who is not a body corporate. It means if the supplier is a body corporate, now that sponsorship service will come under forward charge and it will not be under reverse charge. So this is what is the amendment which you should keep in mind. I hope this is clear to you. Then comes a very important amendment. Already this entry itself was introduced as an amendment sometime back. And then this entry is continuously undergoing some or the other changes every time. So since it was a new entry, already this entry, when it was introduced, since it was introduced in between, then after introduction, some challenges came, so they amended it. More challenges came, so you have further amendment. Now, what is the service? The service is service of renting. Now, renting what? Renting of a commercial property. How it is commercial? See, it is saying renting of any immobile property other than a residential dwelling. So, first, it is an immobile property and it is not a residential dwelling, so it is a commercial property. So, in particular, we are talking about renting of shops, renting of offices, renting of godowns. Now, these services, if they are provided by a registered person, the person is already registered under GST, the rent is leviable to GST under forward charge. But where the supplier is unregistered, now why this point is important? Because you will find that in India, buying property is also like an investment strategy. So many times people invest their surplus funds in property, and one of their perspective in doing so is earning a fixed income in the form of rent. So many times, and nowadays in many cities, you'll find that even in your cities, now, so in India, of late you will find in many cities, maybe even in your city, that there is huge construction coming up. And suddenly post COVID, this has increased. Plus also suddenly post COVID, at least I am seeing that there is a lot of commercial property being constructed, big malls being constructed, big buildings which are having shops and offices up to the top floor. Otherwise, generally commercial was only up to the ground floor or first floor. Now the entire building is commercial. Now in this building, the person who is buying need not be the final consumer. It may be a retired person or a person who is in service and has taken a loan and created this property, or maybe at the time of retirement has received lump sum PF and decided to buy a property. So many times you'll find that the buyer or the owner of these shops, offices are individuals, and they may have been salaried throughout their life. Right now, they may be either in job or are only getting pension. So they are not registered nor even required to be registered under the GST law. Now, such persons, again, the same logic of administrative conveyance, the government cannot go behind so many persons and cannot find the trace of such persons. Hence, if the supplier is an unregistered person, but the recipient of this service, that is the person who's taking this office shop on rent, is a registered person. Obviously, if you're a business and you're taking some shop for running your business, or taking an office, let us say you're a practitioner, a chartered accountant, and for running your practice, you have taken an office on rent. So there is a possibility that over a period of time you'll get registered. So supplier is an unregistered person and recipient is a registered person. If the supplier is a registered person, then even if recipient is registered or unregistered, the tax will be paid under forward charge. So very important requirement is supplier should be unregistered. Similarly, in this case, if supplier is unregistered and the recipient is also unregistered, why? Because you have newly started your business. Right now, you have not crossed the threshold of registration. So if recipient is also unregistered, supplier is also unregistered, then in such cases, again, the tax will be under forward charge. And in that case, if the turnover of the supplier increases the threshold, the supplier will have to go and take registration. So supplier unregistered, recipient unregistered, forward charge. Supplier registered, recipient registered or unregistered, forward charge. Reverse charge only where supplier registered, recipient, supplier unregistered and recipient registered. This is the only one scenario where reverse charge is applicable in case of renting of commercial property, not residential. For residential, we have different conditions for RC. In case of residential, supplier may be anyone where recipient is registered. That is the case where the tax is levied in case of renting of residential property. In all other cases, it is exempt. And that is the case which is also under RCM. So if it is a residential property, then the tax will be applicable where the recipient is a registered person, supplier may be anyone, registered or unregistered. Now, coming back to the commercial property point. Now, in case of commercial, so the first thing is clear, supplier should be only unregistered and recipient should only be registered. Now, here there was a challenge that if let us say this person who is doing business, let us say a person running a grocery shop or a drug store, running a chemist shop, has taken your shop on rent. You are unregistered supplier, fine. Recipient is registered, fine, but the recipient has opted for composition scheme. Now, this was creating a challenge for them because we all know composition dealers are not eligible to get credit. So, in order to give them a relief, this particular provision is introduced that a composition dealer, even if registered, will not be required to pay tax under RC. So, in case of commercial property, supplier is unregistered, recipient is registered, but recipient should not be a composition dealer, should be a regular registered dealer. If the recipient is a registered dealer who is a composition dealer, that is who has opted for composition, RCM will not apply. The same amendment of above is also provided in case of interstate supply of services. Next, clarification in respect of input tax credit, which is availed by electronic commerce operator, where services notified under 9(5) are supplied through their platform. Now, firstly, let us understand what the point is. So, there is a provision called as 9(5) under the GST law. What is this 9(5) dealing with? So, section 9, as you all can recall, is the section dealing with levy. Now, 9(1) says tax will be paid by taxable person, which generally means the supplier. 9(3), 9(4) says it will be paid by the recipient. And 9(5) says that for some notified supply of services, the tax will be paid by the platform, that is the app through which those notified services are being provided. Now, what are those notified services? I'll take the most common example, Ola Uber service, right? Or you have the Urban Clap app. I think now recently the name is modified. Earlier it was Urban Clap. Now I think it is Urban Company. So from that app, you are booking any household requirement, like you can get a house help, you can get a driver, you can get a cleaner who can clean your entire furniture, everything, sofa set, etc. So these are called as housekeeping services. Now, when we talk about 9.5, what does 9.5 says? In case of these notified services, like as I said, I gave you example of two. First is Ola Uber, that is passenger transport. The second is your housekeeping services, for which the example is Urban Clap. Now, in both these cases, understand this. So let us say I am the person who is owning the car and I have registered my car, or on your app, you are running the app, which is the Ola app. And there are thousands of people who through Ola app are regularly booking vehicle. Now, as per 9.5, when there will be any booking of this car on your app, that is the Ola app, though I am the supplier because I am the person who will be providing this car rental service, but the tax would not be paid by me under forward charge, neither the tax would be paid by the customers under reverse charge. Again, why? Same reason, administrative convenience. So see why 9.5 was introduced. This concept was not there in service tax because at that time, online and all these apps were not there. They came in very late. And by that time we had GST. So they brought this concept in GST. So you will find that again, administratively, where there are thousands of different car drivers, or now even the rickshaw drivers and even the two-wheeler drivers who have registered themselves on the Ola app. And there are equally thousand number of common men who are booking the vehicles through Ola. In this case, both the persons, the cab operator and the customer, both are unregistered, not having any fixed place where the government can tap them, and they are multiple in number. But since they are doing booking through an app definitely will be having a proper place, because a person who is running an app has to have a proper setup where they have a team which is continuously running their software, which is continuously monitoring. So they will have a proper setup, and it will be easy. The government felt it is easy to catch hold of the person who is running the app rather than the supplier or recipient of these notified services. I gave you example of two services. One is passenger transport and the other is your urban clap, that is housekeeping service. Now, in both these cases, as per 9.5, who is liable to pay tax? It is this app. So you are the owner of the app. You are running this Ola app or the urban clap app. Now, what is the issue? The issue arises from the situation that as per 9.5, the app, e-commerce operator is the app, is required to pay tax, fine, when it is making supply under two counts. One, supplies which are notified under 9.5. So let us call them as notified supplies. I gave you example of two. There are total 5, for which he is liable to pay tax as if he is the supplier. Second, supply of his own service by providing his electronic platform, for which he charges platform fees, commission, etc. from the platform user. Now, what is interesting is point number 2. So point number 1, I gave example of notified service. What is point number 2? Supply of his own service. What is that service? By providing his electronic platform, for which he charges platform fee. So now today you have multiple platform. I'll give you an example, Paytm. Now Paytm is a platform which you are using because you are able to do all payments. You are able to do all bookings, whether of movie, whether of flight, whether of hotel, using this app. So what is this Paytm app doing? It is helping you make payment. So you have such apps also which are themselves providing some service. And what is their service? Their service is, like in case of Paytm, helping you make payment. Now, whenever you are doing any booking from Paytm, the Paytm takes its consideration, which is called as the convenience fee, platform fee, service charge, commission, etc. Now comes the point. For providing the services mentioned in 2 above, so now into it is Paytm. ECO procures inputs as well as input service for which he avails ITC. Now, interestingly, please understand the situation. For the first service, where you are an app, Ola, Uber, you are actually not the supplier. Supplier is the cab operator. You are only running an app. In second case, you are originally also the supplier. So in second part, when you are running an app like Paytm, Paytm is not acting like an Ola Uber. Okay. People may also book flight and people may also book uh, hotel through Paytm. But the main purpose of Paytm is helping you make payment. So Paytm is itself providing its own service of providing you the convenience that you can make payment anywhere without using a checkbook, without using any bank. You can directly use the Paytm app and make the payment. Now, in this case, Paytm app would have incurred expenses or is incurring expenses, and on those expenses, it has received input tax credit. Now, what is the issue? Whether Paytm, now I'm purposely using the word of the app so that it is easy for you to understand. So instead of saying ECO, I'm saying Paytm. Whether Paytm is required to pay tax under 9.5, is liable to reverse proportionate ITC on his input service to the extent of supplies made under 9.5. Now, you will see that Paytm or the apps like Paytm, which are engaged in both. One, they are also providing some notified supplies, like they help you in doing bookings. Like you can book flight, you can book hotels. So let me tell you, hotel is covered in one of the notified supplies of 9.5. Restaurant is also covered, where the hotel restaurants are themselves unregistered. Now, where you are making these bookings using the Paytm app, so in such cases, you means the Paytm app is acting under 9.5 and it is required to make payment of the tax of that hotel or of that restaurant which is unregistered, because it is one of the notified supplies. And at the same time, the Paytm, since it is also acting as a person who is allowing you to make payment using the app, it is also charging you convenience fee. In this case, the Paytm is engaged in two different types of services. And interestingly, for the first service, the law says the Paytm app or the ECO is not eligible or entitled to take ITC. But for the second service, it is eligible and entitled to take ITC. So here, what is the issue? Whether this ECO is liable to reverse proportionate ITC on his inputs and input services to the extent of which it is making the first supply, for which the law has put the condition that you cannot take ITC. Now, this has been clarified. Earlier, there was a circular number 167 dated 17th of December 21, which said that the ECO shall not be required to reverse ITC on account of restaurant services on which he pay tax under 9.5. So as I said, restaurant, hotel are one of the services covered in 9.5 where the restaurant, hotels are unregistered. So it was a clarification that time that where you are acting as an ECO, so technically, you are actually not the restaurant service provider. Please understand. See, restaurants do not get ITC, but that restriction is on the restaurant itself. Here, you are not a restaurant. You are only the app to which people are making payment for the restaurant services. So when somebody is ordering food using your app, now the app is required to comply with the GST under 9.5. That is what 9.5 says, where the restaurant is a small restaurant and it is unregistered under GST. Now, in this particular case, why this clarification had come? Because firstly, we know that restaurant service providers are not eligible to ITC, their output rate is 5%. But here, when that particular service is provided through ECO, ECO itself is not a restaurant. So this clarification had come which said that it is not required to reverse ITC on restaurant services which are provided through this app. So somebody is booking food using your app like Zomato, Swiggy, and you are required to pay tax under 95. It has also been clarified that ITC will not be allowed to be utilized for payment of tax liability under 95, and whole of the tax liability will be required to be paid in cash. This principle also applies to supplies made in respect of other services specified under 95. So interestingly, on one side, the circular said you are not required to reverse any ITC on account of restaurant services. However, at the same time, it is also clarified that ITC cannot be utilized for making payment of this tax. That is, this tax of restaurant services you have to pay in full using cash ledger. But at the same time, you can take the ITC, so there will be no reversal of ITC. Now, thus it is clarified that ECO is liable to pay tax under 95 on notified supplies, is not required to reverse ITC in respect of input services as required under 1712 to the extent to which it is making supplies under 95. Now, it is further clarified that ECO will be required to pay tax in cash only because that is what is the requirement, that these amounts have to be paid in cash. However, such credit can be utilized by him for discharge of tax liability in respect of supplies on his own account. So, first clarification, you don't have to reverse ITC for the proportionate amount of supplies that are made under 95 category. You don't have to reverse the ITC. But at the same time, 95 services have to be discharged or made paid in cash. So you make payment in using cash ledger. But now whatever ITC you are having, which you have not reversed because now they have clarified that reversal is not required, that complete ITC you can use where you are making payment for your own service. So for your own service, you can use the ITC, but you cannot use the ITC for the 95 services. First point. Second point, no requirement to reverse any credit in relation to 95 services. It means you are eligible for full credit. And third, whatever is the tax coming on 95 services, since you are not required to, you are not allowed to utilize any credit against that, that amount will be paid using cash ledger only. So these are some parallel points which are clarified in this particular circular, which is a recent circular dated 31st of December 24. Now we go to the next point. Now in GST law, there is this concept of government where you will find that they specifically use the word central government, state government, then they say local authority. Now, as far as central and state government is concerned, there is no challenge because there is only one central government and every state has only one state government. So we know who is central government, who is state government. But when it comes to local authority, the concept of local authority is very wide. In fact, even the definition of local authority is very wide because local authority will mean municipality, municipal corporation, gram panchayat, zilla parishad, so many things. Now here, since the definition of this is so wide, since the definition is so wide, there arose a confusion. What is the confusion? You have an authority called as the Delhi Development Authority. Now, for this authority, the question is whether it will be treated as local authority. Now, whether this Delhi Development Authority will be called as a local authority. This is the issue. Now, why this issue is relevant? Because for many exemption entries, you need to know because there are many exemption entries referring local authority. Second, also there are multiple, what you can say, other entries like in case of RCM, where there is a reference of local authority. Now, in such cases, we have to identify and find out as to can we call this Delhi Development Authority a local authority so that it will be fitting in all these RCM and exemption notifications. Now, in this regard, this circular is very relevant. Now, what does the circular clarifies? So, firstly, it refers to the definition of local authority, which is provided in the GST law, which says that local authority would inter alia mean, or it will include, just a second, just a minute. Now, so the concept of local authority under the GST law, besides others, also includes municipality, Zilla Parishad District Board, and any other authority. Now, this is where all the ambiguity comes. But what is clarified is which any other authority is included, which is legally entitled or entrusted by the government with the control or management of the fund. So I believe this is the deciding factor. So where there is any authority which is given the power to control and manage the municipal fund, that authority is what is the local authority. Now, applying this concept to the present case of EDA. It means an authority which is similar to first, it should be an elected self-governing body. So a municipal committee is, and which is also entrusted with the control and management of the municipal fund or local fund. So these are the two governing or deciding factors. So one is that it should be an elected self-government body. Two, it should be given the power to control and manage the fund. Now we apply this to DDA. It has been clarified that the DDA cannot be treated as local authority because it does not meet these requirements. So it may be a body elected, but it is not having the power of controlling and managing the fund. Hence, DDA is not the authority as per the GST law, which can be called as local authority clarified. Now we move on to the next topic where there are some clarifications, some amendments. So the topic is of place of supply. Now we all know under the GST law, place of supply is very, very important. This place of supply concept is there to decide one, what will be the nature of your supply, interstate, intrastate. Two, to decide whether the buyer will be eligible for ITC or not, because the eligibility of buyer for ITC is linked to the availability or to the status of your supply. That is whether the supply's place of supply is falling in the same state as the buyer. Now, in this particular case, when we are talking about place of supply, this point is regarding the place of supply of online services which are supplied by suppliers to unregistered recipients. Now, why this point is important? Let us understand. This point is important because the provision of online services is, especially if you are talking about like online coaching classes and all, you'll find that there is no specific entry for place of supply. And today we have so many online services, service providers, and also many online services. So except for OIDER, because OIDER has a separate place of supply provisions, except for OIDER, for other online services, there is no specific rule for determining place of supply. And in such cases where there is no specific rule, you apply which rule? You apply the general rule. Now, the general rule in case of domestic transactions is section 12 bracket 2 of the IGST Act. Now, what does the general rule says? The general rule says that where your service is not falling in any of the specified provisions, then as per this provision of section 12 bracket 2, the place of supply will be point number 1, where the recipient is registered. It is the place of the recipient, or I will say where the recipient is identifiable, it is the place of the recipient. Second, where the recipient is unregistered, then if still the address of the recipient is available on the record of the supplier, it is still the recipient. That is why I said identifiable. So if you are able to identify who the recipient is, where the recipient belongs to. So when you'll be able to identify one where the recipient is registered, it is his place. If he's unregistered, but still you have the proof of the location of the recipient, and this proof is available, the address proof is available on the record of the supplier, then also the place of supply is the location of recipient. However, where the recipient is unregistered and the address is not available on record of the supplier, in that case, I will say that the recipient is unidentifiable. In such cases, the same section 12.2 says, then now we have no choice but to take the place of supplier only as the place of supply. So obviously you charge C plus S. So the general rule says recipient identifiable, place of supply is recipient's location. Recipient not identifiable, place of supply is supplier's location. This is the rule. Now we come to the issue. Now what is the issue? So 1.12.2, which says that, as we just studied, 12.2 says that supply, if recipient registered, no problem. Now we are talking about 12.2b, where the recipient is unregistered. So I have to first check if his address is available on record, and second, if not, then it is location of supply. Now there is one more provision, section 31, which deals with invoicing. Now what does 31.2 says? A registered person supplying a taxable service shall, before or after the provision of service, but within a prescribed period, issue a tax invoice. Doing what? Showing the description, value, tax charge, and such other particulars as may be prescribed. So this is the requirement of 31, which is actually a topic relating to invoicing, but how these are interconnected and what is the issue, that we'll understand. So first, for that, we need to understand the provision. So provision is that the person who is supplying a service shall, either before or after the provision of service and within specified time, issue a tax invoice. And this tax invoice should show the description, value, and such other particulars as may be prescribed, provided the government may, on recommendation of the council by notification, do what? 1. Specify the category of services or supplies in respect of which a tax invoice shall be issued within such time in such manner as may be prescribed. So for certain notified services, the government may specify that the tax invoice has to be issued in a particular period of time, and that has to be then complied with. 2, subject to conditions mentioned therein, specify the category of service in respect of which any other document issued in relation to supply shall be deemed to be a tax invoice, or a tax invoice may not be issued. This second part is important, where the law allows that if the government has notified, that is, it has specified the names of certain services, for those services, either tax invoice may not be issued, or for those services, any other document may not be in the form of tax invoice, will be deemed to be tax invoice. I'll give you an example of this. Like when you go for a movie, you don't get a proper invoice. You get a small movie ticket, many times, which is that like horizontal strip. That is also tax invoice accepted. Similarly, When you go to, um, when you travel by AC bus, which is chargeable to GST, for AC bus, again, it is taxable to GST, but they don't give you invoice. They have that machine from which there is small slip coming out. That slip is also accepted as invoice. Why? Because those services are covered in this clause B. Now, what is the issue? Once you have understood both these provisions, so a conjoint reading of this 12(2)(b, which says that where recipient is unregistered and address available, location of recipient, address not available, it is supplier. Plus 31(2), which says that for some supplies, you may not give a detailed tax invoice, even that slip and all is acceptable as tax invoice. And the proviso to rule 46F. Now, what is 46F? 46F is names and address of recipient and address of delivery, along with the name of the state and its cost, if such recipient is unregistered and where the value of taxable supply is less than 50,000, and the recipient requires that such details to be recorded, provided that in cases involving supply of online gaming, or in cases where any taxable service supplied by or through electronic commerce operator or by a supplier of online information database access or retrieval service to a recipient who is unregistered, irrespective of the value, a tax invoice issued by the registered person shall contain the name of the state of the person, and the same shall be deemed to be the address. So what is the relaxation given? The relaxation given is that with respect to one, where the recipient is unregistered, that is the recipient is not going to get ITC. Two, it is online gaming or it is provision of some services online. This is what is our main point of discussion here. You may not even record the complete address. You may only mention the name of the state. Now, once you know what this rule provides, so now what is the effect? Conjoint reading of all these provisions leads to a conclusion that in respect of supply of service made to unregistered persons, irrespective of value, the supplier is required to mandatorily record the name of the state. So this is what is compulsory. You have to record the name of the state of the unregistered recipient on the tax invoice. In cases involving supply of online money gaming or supply of taxable services by or through economic operator or supply of order, recording of the name of the state of the unregistered recipient on the tax invoice in respect of such supply shall be deemed to be the address on record of the recipient for the purpose of 22B. So this is what is the conclusion. So firstly, the rule section 31(2) and rule 46 has relaxed you from mentioning everything on the invoice, and in that specifically for online gaming and specifically for online services, what has been relaxed that where your recipient is unregistered, you need not mention the complete address. You can only mention the state, and this state will be deemed to be the address. Now, when we read this in 12(2)(b, it says that where the address is available on record, you take the address of the recipient. But now I do not have the address. I only have the name of the state. So the question is whether the name of the state would be considered as complete address. This has been clarified that yes, we will treat the name of the state as complete address, and accordingly in such cases, the place of supply of such service shall be considered as the location of recipient as per 12(2)(b). So the combined effect of all these three provisions is that where you are supplying online money gaming services to an unregistered person, even if you have recorded the name of the state, the recording of the name of the state is sufficient, and that is deemed to be the address on record, and that is deemed to be the final service. So that will decide the place of supply. So the name of state is complete address, assumed, deemed, and that is what is the place of supply as per 12(2)(b). Combined reading of the definition of electronic commerce and electronic commerce operator as per both these sections, along with 46F, provides an understanding that all supplies supplied to unregistered recipient over digital or electronic network. This is what is the definition of electronic commerce. Either by the supplier using his own digital or electronic facility or through an other electronic or digital platform owned and operated by independent e-commerce operator will be covered under the provisions of 46F. That is, in both cases, one, where you are using your own app to provide a service, or where you are using a third-party app to provide your service. In both cases, Rule 46F will apply. And when Rule 46F will apply, what will happen? You can only mention the state name, not necessarily the full address. It is accordingly clarified that provisions of proviso to Rule 46F shall be applicable in respect of all the online supplies of services supplied to unregistered recipient, in addition to supply of online money gaming and order. So 46F applies to all types of online services, all money gaming or order or any type of online services. So some of the example of services are now what will be covered here in 46F. Online newspaper. So nowadays, instead of getting physical newspaper, you can subscribe and you will be getting daily the e-version of the newspaper or the e-magazines, like how even for our institute, you can subscribe and you can get the e-magazine. Similarly, online subscription of entertainment services. So we all know you have various OTT platforms where you have some monthly or annual fees where you can supply and those services are provided. Online telecom services, you have mobile services, then digital services through mobile applications. So there are so many mobile applications and many of them are paid. In fact, I will add to this one more thing, the recent development, that is your AI tools. So AI tools will also come under this category only. Now, in respect of following cases of supplies to unregistered recipient, the suppliers are mandatorily required to record the name of the state. So what is only compulsory? If the recipient is unregistered, you should maintain or record the name of the state. That is compulsory, may not be complete address, not even the PIN code. So it is required mandatory to record the name of the state of the recipient on the invoice, irrespective of the value of supply, and to declare place of supply of the said service as the location of the recipient on the basis of the name of the state. In short, the name of the state will become the place of supply for online services provided to unregistered recipient. The same has to be uploaded in their details of outward supply in the form GSTR1 1A as the case may be. For what? Supply of such online or digital services. We saw the examples, order services, and even online money gaming services. Now, the next topic is exemption. Now, in relation to exemption, what is important? So you have notification number 12/2017, which provides you exemption with relation to the CGST Act. And majority of these are parallelly available in the IGST Act as well, where the notification is 9/2017. Now, the amendment in the list of exemption is as under, which has been highlighted by way of bold or italics. Now, first is, now see, some of these are done only as a clarification. Some are done because they wanted to actually change the nature of exemption. Correct? Now, first, description of service. Entry number is 25A. Supply of service by way of providing metering equipment on rent, testing for meters, transformers, capacitors, etc., realizing electricity connection, shifting of meters, service line, giving duplicate bills which are incidental or ancillary to supply of transmission or distribution of electricity provided by electricity transmission or distribution utility to their customers. Now, you will see that there is no major amendment. Only there is a change in the word from and to or. Now, firstly, what is this point? Let us understand. So basically, we are talking about which service? We are talking about the service which, as a consumer, or I'll say as a household, you take these services from your electricity service provider. So we have the earlier they used to call as boards. Like in our Maharashtra, we had the MSCB, Maharashtra State Electricity Board. So every state has its board. Now these boards have been changed, and now the names have been changed to corporations. So now we have MSEDCL, Maharashtra State Electricity Distribution Corporation Limited, or Maharashtra State Electricity Transmission Corporation Limited. So you have the board is now split into generation, transmission, distribution, and all are corporations. So earlier where there was one board, now the board is divided into three: generation, transmission, distribution. Now you go to this board only, which is now this Maharashtra State Electricity Distribution Corporation, MSEDCL. Why you go? Because many times you require some ancillary services, like you want some meter on rent, or you want some testing to be done of the meter or the transformers in your building or your house, or you want some electricity connection, or you want shifting of the meters or shifting of the lines or getting duplicate bills. So many small petty services, and these are chargeable by the electricity companies. Now they are chargeable, but they are also made exempt by this exemption entry. However, a small, you can say, typographical error was that here this list of service is exempt provided they are incidental to supply of transmission and distribution of electricity provided by the transmission and distribution utility. So there was the word point. Now, the problem is today, as I just explained, the single electricity board is split into three bodies: transmission, distribution, and generation. Now, if you have written and, literally, it will mean that it has to be both of them together. So where both of them together provide these services, it will be exempt. This was the meaning, but it is not the intent, because today, since they are split, only one of them is going to provide you this service, not both. That is why, to make the correction and to give you the clarity, this particular word and is replaced by or. Now comes the second entry. It is the service provided by these bodies which are majorly created by government. What is this? National Skill Development Corporation, set up by Government of India. National Council for Vocational Education Training. Awarding body recognized by National Council for Vocational Education. Assessment agency. Training body accredited with awarding body, etc. Now in this, they have added one more person. So this one more person is also eligible for this exemption. But first, let us understand what this exemption entry was dealing with. So in the present government, we have this concept of skill development. Now, for development of skill, the government created many skill development centers or corporations. And for providing the skill development, all these corporations, firstly, so on the top, you have the National Skill Development Corporation. So this is the main parent body. Then below that, you will have the National Council. Then you will have the awarding body, which is recognized by the National Council. Then you will have the body which will be conducting tests. You will be having the body which will be providing training. Now, all these are government bodies which are created. And the purpose is that when these bodies are providing any services, what are these services? The services are in relation to the National Skill Development Program or similar scheme which is implemented by the National Skill Development Corporation. Then it will enjoy exemption. Fine, fair enough, and good point. However, there is small problem in this. What is the problem? The problem is that today practically it is impossible to reach out to every corner of every city where you will find some of the government body which is actually doing the training. So what they did is they started doing tie-ups. Tie-ups with whom? Tie-ups with a private person. So if, let us say, I am having a center where I can provide some computer training, let us say I'm a computer coaching institute. So I already have my setup. What the government will do is they will ask this National Skill Development Corporation, that is a parent body, to do a tie-up with me. What type of a tie-up? I will be recognized as their training partner. So they will give me this approval, whereby I will be given the certificate and they will call me as their approved training partner, so that now I can provide this training, which is part of the National Skill Development Program. Now, the purpose or the benefit of this is point number one, the government may need not spend money on setting up centers themselves and then hiring people who will be doing training, then managing that. Two, so it will save the efforts and time. Two, it will also give opportunity to private entities to be part of this national skill development programs. And already these entities are widespread. In fact, you'll find that in many places, in one building, you will have multiple centers providing the same training, same coaching. So it is easy for government to penetrate even to the smallest rural places, because in rural places also you will find one or two coaching centers of all these skills. So government practically is providing this training by doing tie-up with the training partner. However, though this was done at the government end in their national skill development policy, but the problem was, since the name of this training partner was nowhere included in this list covers all the bodies which are government bodies only, no private person is covered. So when this training partner was receiving the consideration for doing, because now since he's training partner, major part is done by him. So he's getting a major share in the fees of this national skill development. So when he is receiving the fees, he was covered under GST, and unnecessarily the fees got inflated for the student, for the parents, because the fees included GST. So on realizing this, they decided to correct this. So in this list of who will get exemption, they added this one more person who is the private person who will now associate with the government's National Skill Development Corporation as a training partner and will be providing the training. So whatever fees it will be getting, that fees will be also eligible for exemption. So that is what is the purpose. Now next is, following new services have been exempted. Now what are these? Services of insurance provided by Motor Vehicle Accident Fund, constituted under Section 164B of the Motor Vehicles Act, against contributions made by insurer out of the premium collected for third party insurance. So this is a specific insurance. As you can see, it is only dealing with the motor vehicle insurance, and it is covering what? Contributions made by insurers out of premium collected for third party insurance. Now you all know, in case of motor vehicle, once the motor vehicle's original policy period is over and it renews the policy, many times people take only the third party insurance. So that is what is covered over here. That is now covered in exemption. Further, they have introduced some definitions in the exemption notification. So you have the exemption notification where all these above services are listed, and below that you have some terms which are defined. And in this, they have added the definition which says insurer will mean what? It will have the same meaning as assigned to it in section 2, in subsection 2 of section 9 of Insurance Act. Now, who is this person? So as per 29 of Insurance Act, insurer means an Indian insurance company, a statutory body, an insurance cooperative society, a foreign company engaged in insurance. So all these people will be considered as insurer. Now, once they are insurer, so wherever there is an exemption for any insurance policy, that is a premium of any particular insurance policy is exempt, these people who are covered in the definition, so even Indian insurance companies are covered, foreign insurance companies are covered, a insurance cooperative society is covered, or even a statutory body which is set up by the parliament to carry out insurance business. So either it may be a company, Indian foreign, statutory body like LIC, GIC, or even an insurance cooperative society, so which is not even a company. Explanation: for the purpose of this subclause, the expression foreign company shall mean a company, body established, incorporated under law of country outside India, and includes Lloyd's established under Lloyd's Act of UK or any of its members. Similar exemptions are also provided in the IGST Act. So parallel exemptions are added there. Next, Clarification in respect of applicability of GST on facility management services provided to municipal corporation MCD headquarters. Now again, why this issue is because we have exemption when it comes to government on both sides. One, where government is providing service, so government is supplier. Two, where government is recipient of some service. Now this is on the recipient side. Why? Because in respect of applicability of GST on facility management services, which is provided to MCD. Now MCD is part of government. Question is whether the services provided to them will be eligible for exemption. So what are those services? Such as housekeeping, maintenance, civil, furniture, then horticulture. So they have gardens, so maintaining the garden of this MCD office, facility management agency for the upkeep of their office. So these are common services which they keep on taking. So you have housekeeping, whereby you will appoint an agency who will provide you the helpers, gardeners, everyone that are required in the MCD office and all these services. The issue arose for consideration was whether such services received by them are exempt wide entry 3A. Now, what is entry 3A? So, entry 3A of the exemption notification provides exemption to composite supply of goods service in which the value of supply of goods is not more than 25%. Now, in the above services, the service provider is providing service, and maybe while providing the service like maintenance and all, it may be consuming goods like doing gardening, it may be consuming some goods of its own, but the total value of goods in the total supply is not exceeding 25%. Now, there is this particular exemption where a composite supply in which goods component is less than 25% is eligible for exemption. Now, whether that exemption applies to this particular type of service which is provided to MCD. What is given? Entry 3A provides exemption to composite supply of goods service in which the value of supply of goods constitute not more than 25% of the value of this composite supply provided to. Now, to whom it is provided? Government, local authority by way of an activity in relation to functions entrusted to panchayat under this or in relation to function entrusted to municipality under this article. So recipient can be government local authority, fine. The supply can be a composite supply, including goods service where goods is not exceeding 25%, fine. But the notification further requires that what should be the nature of service? The nature of service should be such that it should be by way of an activity in relation to a function entrusted to panchayat or municipality. This is the key point. Now, the service of facility management, like housekeeping, maintenance, furniture maintenance, horticulture, for upkeep of MCD office are not in relation to functions which are given by the constitution to municipality or to Gram Panchayat. And since they are not part of any such functions, hence, when an MCD office is receiving these functions, which is not a function entrusted to municipality, etc., they cannot qualify for exemption under entry 3. So it is clarified that GST will be applicable to the facility management agency who is providing services to MCD headquarter office. Next, clarification in respect of exemption to payment aggregators in relation to settlement of amount up to 2,000 in single transaction to credit card, debit card, charge card, etc. Now, firstly, what is this? So, when you go to a shop and you have purchased something, maybe goods, or you have availed some service, and you want to make payment. So many times you use your card. Now, when you swipe for your card, the bank will charge you some fees. Again, the same convenience fee, like how this Paytm charges, the bank will also charge convenience fee. Now, here the question is whether the convenience fee charged by bank is taxable. The answer is yes. The second question, is there an exemption? The answer is yes. The exemption is where the transaction value, not the fees. So the fees may be 5 rupees, 2 rupees, 1 rupee, whatever. But where the transaction value, that is the amount of your payment which you are swiping, is up to 2000, there is was, or there is not was, there is exemption, which is by way of entry 34. Now the question is whether the same exemption is available to payment aggregators. Now, who are payment aggregators? So let us say I go to a shop, I use my card, I swipe the card. Similarly, all of us go to that particular shop, we buy something, we swipe our card, and all of our transaction value is below 2000. Now we all individually are eligible for exemption because all of our individual transactions below 2000. Now that shopkeeper is using some machine. The machine belongs to a person, which may be a bank, which may not be a bank, who has provided that swipe machine facility. Now that person is required to collect the payment from all of our banks whose card we have swiped and deposit that money in that shopkeeper's bank. That is what is the role of that person. That is what is the service that person is providing. Now, maybe all of our independent transactions are below 2000, but when this person will go for getting this transaction cleared from every bank, what it will do? It will give the bank the list of all the transactions that have been done with that bank. Maybe individual transaction is below 2000, but the total list is having 2 lakhs. Now, this is what is the question, that whether this benefit of 2 lakhs is available to payment aggregators in relation to settlement of amount up to 2000 in a single transaction to the cards. So what is the clarification? Now, payment aggregators are those entities who facilitate e-commerce site and merchants to accept various payment instruments from their customers without the need for the e-commerce site and merchants to create a separate payment integration system of their own. In the process, these payment aggregators receive payment from customer, pool and transfer them to the merchant within a specified time period. So as I said, so this person will collect all the payments. So whatever we are swiping, that amount is being collected by this person. Now this may be through the physical machine, or even nowadays we have this online payments. So when you go and scan a QR code, it is not that you are directly the amount is going from your bank to that person's bank. This QR code, now like we saw again in majority shops, you have that Paytm. So it says Paytm Karo. Why? Because that machine is of Paytm. So when you are swiping it, or when you are scanning the card and making the payment aggregator is this Paytm. So Paytm is first collecting money from all our banks and depositing the money in the bank of this businessman. Now the question is whether the Paytm will also be eligible for this benefit, and whether this benefit will be counted per transaction that we all have done, or what aggregate that person is going to do, because that person aggregate is definitely going to exceed 2000. Now, for this, we need to read the entry thoroughly. So entry 34 provides exemption to service. The service is of the acquiring bank in relation to settlement of an amount of 2000 or up to 2000 in a single transaction. You transacted using this credit card, debit card, etc. Acquiring bank means the banking company, financial institution, non-banking financial company, or other person who makes the payment to any person who accepts such card. So basically, acquiring bank is the bank of the shopkeeper. Now, these payment aggregators, or we also call them as payment gateways, receive payment from the customer in one account, which is called as escrow account, and are obligated to do the final settlement with the merchant. Merchant means the shopkeeper within the specified time period. Therefore, RBI regulated payment aggregators involved in settlement process of making payment are covered by the second part of the definition of acquiring bank, that is any other person who makes payment to a person who accepts such card. So even though they themselves are not the bank, but they are covered in the second part. What is the second part? This part, or any other person. So first is acquiring bank means the bank itself. And if it is not directly the bank, there is some in between person, it is the payment aggregator. So firstly, payment aggregator is covered. As I said, payment aggregator is also called as payment gateway. So when we make payment, the payment is not going to the bank of the shopkeeper. It is first going to this Paytm. Again, let me call it as Paytm or Razorpay, who collects all our money. Only it is showing the message to the shopkeeper that yes, payment is received, but it is not received in the bank. It is received with this payment gateway. And then periodically, maybe after 2 days, 3 days, the payment gateway transfers the money to your bank. Payment gateways are defined as entities that provide technology infrastructure to route and facilitate processing of online payment without any involvement in handling the funds. Fine. Payment aggregator. So you have this payment gateways or payment aggregators. So whenever you swipe a card, the payment goes to this person. It is kept in a separate designated account called as the escrow account. And then through this escrow account, after a specified period, the payment aggregator will make payment to the bank of the shopkeeper. Now, it has been clarified that payment aggregators or payment gateways fall within the definition of acquiring bank that we studied above, given in the explanation to the said exemption entry as they make the payment to the merchant who accept cards, etc. Consequently, this exemption under entry 34 is available to the RBI regulated payment aggregators in relation to settlement of an amount up to 2000 in a single transaction. It is also clarified that this exemption is limited to payment settlement functions only, which involves handling of money and does not cover payment gateway services. So the clarification is that if this payment aggregator is an RBI regulated payment aggregator, then what exemption we are talking about per transaction 2000. So this person may have 50 transactions in a day, which are below 2000, but the exemption will still continue because the limit of 2000 will still be counted per transaction done and not the total amount which this person is going to make payment to the shopkeeper. Fine. So here we take a break. I've been speaking now for more than 1.5 hours. So let us take a 15 minutes break. After that, we come back and proceed with the further amendments. Now, the next topic where we have some amendments clarification is time of supply. Again, just some background basic before we can go to the amendments. As you all know, what is time of supply? So time of supply is basically the date the law asks you to pay tax. Now you'll say, sir, what is this? So taxable event is supply, but supply is a transaction which has different limbs. So one is I am performing the service, so I'm making the supply. Then I am preparing the invoice, which is another limb which can have some time gap because for service I have 30 days time to prepare the invoice. And then the third limb is where I will receive the payment or you will make the payment. Now, when there are these three limbs may be spread across different time frames. Advance may come at the start and service may happen after 3 months and invoice may happen in further 30 days. Or for service may happen, invoice happens and payment come after 6 months. So there are different permutation combinations in this. So what does time of supply provision do? So time of supply provision basically is there to give you one particular date on which you have to go and discharge the tax liability. So out of all these multiple timelines relating to one supply, which is the date on which you have to discharge the tax? That is what is the role of time of supply. Now, in case of service, the general rule is the time of supply will be in case of a regular service, if the invoice is prepared within the timeline, which is 30 days normally, then it will be the date of invoice or the date of receiving payment, whichever is earlier. If the invoice is not prepared within the timeline, then it will be the date of providing the service and the date of receiving payment, whichever is earlier. This is the general rule for time of supply. Now, here what we are going to read is relating to clarifications on various issues pertaining to treatment of voucher. Now, firstly, let us understand what a voucher is. See, voucher word is very generic. If you read audit, in that you have a term vouching, where voucher means the invoice, the documents which are evidence of various transactions and entries that are passed in the books which you are going to audit. So in audit, voucher has a different meaning. So voucher is any document which represents that transaction, which may be invoice, your invoice, third party, or any type of delivery challan, anything, any document which represents a transaction entry is a voucher. But here, voucher is a different use in a sense. How is voucher used in this topic of time of supply, or I'll say in the overall subject of GST? Here, voucher is used as that, uh, if I can use the word, a document which represents payment. Now, what is this? I'll give you a real life example first so that you'll understand this better. So let us say now we are again going to have this winter festival seasons. You'll have the Christmas, New Year, and then eventually we'll have the Makar Sankrant. So again, from December, you'll have another cycle of festivals happening. Now, in this case, let us say I wish to gift you something, but I do not know exactly what is your exact taste about the color, style, etc. So I go to West Side Mall and I give them upfront rupees 5,000 and say, Ki boss, I want to gift my friend something, but I do not know exactly what to buy. So I'll do one thing. I'll give you 5,000 rupees upfront and you give me a proof of this. Now, now, what he will give me as a proof, he will have a printed paper on which the name of his website is written, some terms and conditions are written on the back, and the amount is either pre-printed or he will write it by hand and give it to me. So I will get this voucher from him. Now, why I have taken this voucher? This voucher is also called as gift voucher. Because since I do not know exactly what will be your liking, as to the goods or service. I do not know what to give to you. Hence, I will do what? I will give you the voucher. Now, in this particular case, you will use this voucher. How? You will go to the website. You will buy anything of your choice. Obviously, it should be covered in the voucher. So I have taken a general voucher, let us say. So you can go and buy anything from the entire website. And let us say your total bill is 6,900. So on the counter where the bill will be 6,900, one second. Now, in this case, your bill is 6,900. When you are on the cash counter, you will first give him the voucher, which is doing what? As I said, voucher is the payment. So once you give them the voucher of 5,000, they will say, okay, fine, pay the balance, which is 1,900. So now out of 6,900, 5,000 payment is already done by me, which is represented by this voucher. So now you have to make the balance payment. So what is voucher? Voucher is nothing but a piece of paper representing payment, representing consideration. How it is defined in the law? Voucher may be in the nature of payment instrument. So technically they have used the word instrument. I was in document, which creates an obligation on the supplier to accept the voucher as what? As a consideration or part consideration. So instead of you paying the full 6,900 consideration, you give voucher which acts as a part consideration. Correct? Okay. Now, once you have understood what the voucher is, let us proceed. So even the RBI has given some instructions relating to regulating the voucher. Now, how does RBI defines voucher? So there is a concept which is prepaid instrument. What does it say? Payment instruments that facilitate purchase of goods and or services against the value stored on such instrument. The value stored on such instrument represents the value paid for or by the holder by cash, by debit to bank account, or by credit card. So this is the technical definition, but again it uses the first part. It is the payment instrument that facilitate what? That facilitate purchase of goods, services against the amount which is written on it, for which they have said value stored on such instrument. Stored means that nothing stored, the value which is printed on that. So the value which is printed on such instruments represent the value paid for by the holder. So if you are having the voucher of 5,000, so what it will represent? You have already paid 5,000, correct? The prepaid instrument can be used as, can be issued as a card, like how, as I said, a piece of paper, or even wallet. So nowadays you have, after the advent of technology, you have something called as wallet. So many times when you do shopping, there is an offer that if you do shopping of this value, we will give you credit points. So now a new concept has come that they call it as credit points. So what is credit points? That much amount they will deposit in your wallet, or you can buy the form of like in the same thing, I'll give him 5,000 and ask them to transfer that much amount to your wallet. So anyways, so either it can be in the form of a printed paper or a card, or it can be a wallet, and in any such form instrument which can be used to access the PPI and to use the amount therein. PPI is prepaid instrument, that is the voucher. So it can be in any form such that it can be used for making the payment. Now comes the other point. As per section 275 of the Act, money, now we are going to the definition of money, includes an instrument recognized by RBI, which can be used as a consideration. Now here, I am sure you'll understand where we are heading to. So we studied the definition of voucher along with the RBI's definition. And now we are studying the definition of money of the Act, which says that money includes an instrument recognized by RBI, which can be used as consideration. Now the effect is the combined reading of the definition of voucher as per this section, along with the definition of money as per this section, and also the description of prepaid instruments as defined by RBI, we have the following observations. What are they? First, where voucher is covered as prepaid instrument recognized by RBI and used as a consideration to settle an obligation. In such cases, voucher will become money. And once it is money, it is neither goods nor service. Now, if you observe, majoritarily, voucher will be case A only. Why? Because voucher generally is a prepaid instrument and it is used as a consideration to make payment. So as I said, when your bill is 6,900, give him voucher of 5,000. To that extent, your amount is settled. So in general scenario, voucher will be money. Hence, voucher is neither goods nor service. Why this is important? Because there was a dispute that whether there is any GST on the sale of voucher. Now understand where we are heading to. So why this clarification is required? There was a long pending dispute. Like I go to the west side. Actually, what I'm doing is by paying 5,000, I'm buying a voucher. So when I say I'm getting a voucher, people said you are buying a voucher because you paid 5,000 and you are getting a card which has written some instructions, the name of west side, etc., etc., and it has written 5,000. So they say by paying 5,000, you have purchased a voucher. And then once somebody said you have purchased voucher, then immediately the department felt that okay, if it is purchased, it means it is goods. Or if it is not goods, no problem. Anyway, service is comprehensively defined to mean anything other than goods. So it will be service. That is how all the confusion and the debate started. That is where we are landing up to this circular or clarification. Now comes the second possibility, where voucher is not covered as a prepaid instrument recognized by RBI. In such cases, obviously, voucher will not be money. But the question is, what is this case where voucher is not covered as a prepaid instrument? I'll give you example of this. Now there is something, again a real life example, where we call as Sodaxo vouchers. So Sodaxo is the name of a company. Now what is this Sodaxo vouchers? I gave you example of this because this is the most common one. Maybe you also would have heard. What is this Sodaxo? So there is a company who is Sodaxo. Now what it does is, it is in the business of selling vouchers, if I can say so. Now you'll say, sir, what exactly is this business? So basically what Sodaxo does, it tie-ups with different business entities, like with different pizza corners, Pizza Hut, etc., etc., with different restaurants, with different hotels. What it makes the tie-up? That if anybody will come to you with my voucher, and if let us say it is either the amount is written or it is like a card, like if you know your banks give you these cards, platinum cards, gold cards. What is the purpose of this card? That card represents some amount of money. So when you are going there, you can use that card for making payment. But then that card which is given by bank is actually money only given in the form of card. But why I gave you that example? Because Sodaxo cards are that type only, which appears like the bank cards. So it is not that. So what is Sodaxo cards? So let us say Sodaxo has made cards which is of rupees 100 every card. Now what it will do, it will print on that rupees 100 company name, Sodexo and all terms and conditions, and it will sell this. Now it will sell to whom? It will sell to anyone who wants to give these cards to its employees, to its customers as a gift. What is the purpose? So that company, let us say there is a company A Limited, who on the occasion of Diwali wants to give its employee gift worth rupees 5,000. But the gift should be such, or the card or the voucher should be such that the employee can use anywhere. And in that case, the company will not go to West Side as I did, because West Side, if voucher is taken, then it will be used only in West Side. So company does not do that. Then company buys Sodexo vouchers. It is also called as coupons. Now, in some cases, these vouchers are only limited to food, so they are called as food coupons. So an employee can only buy food. So where see how these vouchers are used. I'm talking of case B. So there are some companies like Sodexo who are purely in the business of printing and selling these vouchers. These vouchers are purchased by companies who have to give these vouchers to their employees, to their customers. So one, as I said, they want to give gift, but that gift can be anything. So they will buy Sodexo vouchers, let us say of 5,000, give it to their employees so that the employee can go to the market and do anything, do shopping, go and eat in some restaurants where the Sodexo voucher is acceptable. Now, importantly, between the company and the employee and the hotel, the Sodexo voucher is like a prepaid payment instrument only. Correct. But we are not talking of that leg. We are talking of the first leg where the Sodexo company has printed the voucher and it is selling it to the companies. When it is selling it to the companies, it is not like a prepaid instrument. It is something like a commodity only. Because let me tell you how the Sodexo vouchers are sold. So if the voucher is of 5,000, again, how Sodexo company will know which company wants the Sodexo voucher? And it is not something which is very latest that they can market it online. These vouchers are in business since past 20-25 years. So how they would have marketed, how a particular company would have come to know that, okay, I can buy Sodexo vouchers and give it to my employees. So Sodexo, like any other business, has chain. So Sodexo will have distributors, sub-distributors, agents who will go to each and every place marketing those vouchers. And let us say voucher is of 5,000, Sodexo will give at 4,500 to distributor. Distributor will give at 4,600 to wholesaler. Wholesaler will give to the agent at 800, and he will give to the company at 5,000. So everybody has a profit margin. And why the company is buying? Because let us say the company wants to give gifts, or you would be knowing that there are Factories Act and other labor laws which require the company to provide food. Now, it is not possible for a company to run a canteen in their factory premises for varied reasons. Then what they do, they give food coupons so that they are complying with the obligation of respective labor laws. And once they have given the food coupon, their role is over. But from where do they get the food coupon? Same, Sodexo. Now here, the challenge or the point in case B is where the Sodexo company is selling the vouchers. It is sold in a chain. Sodexo, who's printing, will give it to distributor, distributor to wholesaler to retailer. So between them, till it reaches the final consumer, who is the company, it is being traded like a commodity. This is where we are in case B. So where it is case A, that is where it is a particular voucher of West Side and it is given directly to the consumer, matter is solved, it is money, no GST. But what about case B, Sodexo vouchers? Here, for this, what they say, in such cases, voucher cannot be treated as money because between the Sodexo company, its distributor, sub-distributor, etc., it is not money. It is like a commodity. In fact, Sodexo is in the business of selling vouchers, and all these wholesaler retailers are also in the business of selling vouchers. So for them, it is not money. For them, it is a commodity. Now the question is, what will happen on the GST applicability on such vouchers? So for this, what is given? The voucher will be in the nature of an obligation on the supplier to receive it as a consideration or part consideration and assure the beneficiary or the voucher holder to claim certain goods, services as specified on the voucher. So here the supplier, who is the supplier? Supplier is, let us say, Sodexo company. It is under an obligation. What obligation? that it is giving an assurance to the beneficiary. Who is the beneficiary? The person who is buying this voucher or who is holding the voucher, that by buying the vouchers, the beneficiary will be able to claim certain goods. Now, those goods can be anything, as I said, food vouchers or anything, as specified on the vouchers or in the related document. So, whatever will be specified in the voucher, that the person can claim. Claim means go and purchase. In such cases, the voucher can be considered as actionable claim, as vouchers are not covered under the definition of specified actionable claim, which is in Schedule 3. It appears that they are covered in entry 6 of Schedule 3 as actionable claim other than specified actionable claim. Therefore, even in such a case, the transaction in voucher will not be leviable to GST because it will fall in Schedule 3. So they have divided the vouchers into two categories. First category, the voucher is money, no GST because there is no GST on money itself. Second category, the voucher is like a commodity where people are printing and selling the vouchers. In that case also, it falls in the concept or definition of actionable claim. So again, there should be no GST. Now this is the position or this is the understanding. Now what is the issue? Whether transaction in voucher falls under the category of supply of goods and service. So when any of these chain, like as I said, the Sodexo company and its distributor, sub-distributor agents, when between them the vouchers are being sold, company gives to distributor, distributor to wholesaler, whether this type of transaction in voucher, what is the transaction? Trading of vouchers, whether this will be leviable to GST. For what is given, it is clarified that irrespective of voucher is covered as a prepaid instrument recognized by RBI or not, the voucher is just an instrument which creates an obligation on the supplier to accept it as a consideration, and the transaction in voucher themselves cannot be considered as supply of goods service. Hence, however, supply of underlying goods or service on for which vouchers are used will be taxable. So what is clarified? That even in this case, whatever case A, B we have discuss, ultimately when the voucher will go to the company or to the employee, it will be used by them for ultimately buying any commodity, and it will be used as a consideration or part consideration. So eventually the voucher, even the Sodexo voucher, will be used as a consideration instrument only. Hence, even though the Sodexo company and its members are trading between them, still it will not be leviable to. What would be the treatment of GST of transaction in voucher by distributor, sub-distributor, as I just said? So there are primarily two models for distribution of vouchers through distributor, sub-distributors. First, where vouchers are distributed to the distributor, sub-distributor on principal to principal basis. So what is this principal to principal basis? Sodexo company will sell it to the distributor, distributor will sell it to sub-distributor, sub-distributor will sell it to the final agent, and the agent will sell it to the company. Now, between these people, when they are selling to one another, it is principal to principal basis. In such cases, the distributor dealer purchase voucher from the voucher issuer, that is the Sodexo company, at a discounted rate. So as I said, 5,000 vouchers given to them at 4,500. Subsequently, sell the same to the distributor or end consumer and generate revenue through a trading margin. So he may further sell at 4,700, the next one will sell at 4,900 and so on, which is a difference between the purchase cost and the selling cost of the voucher by such distributor, dealer, etc. In such cases, the distributor dealer, including sub-distributor, owns the voucher and operates autonomously with full control over the process from purchase to the final stage. So here, for him, the voucher is like a commodity, like a product, where he's purchasing the voucher, keeping the voucher. Whenever the customer requires, he is selling the voucher, and he has full control over the entire voucher from purchase to sale. Now, as per 9(1), GST is chargeable on the supply of goods or service. As the transaction in voucher is neither supply of goods service, therefore pure trading of voucher will also not be supply of goods or service. So since the voucher itself is neither goods nor service, the sale purchase of voucher will also not be supply of goods service. Accordingly, trading of vouchers is not leviable to GST. So first transaction is clear. Even though you are trading, for you voucher is like goods, like commodity. But since voucher is now clear is neither a good service, why? Either because it is money or either because it is actionable claim. In both cases, it is neither goods nor service. So even if you are trading in it, no problem, no tax. However, the second scenario is the same Sodexo company is selling the vouchers, but not on the principal to principal basis. Then how? So what it is telling the distributor or agent that you sell these vouchers on my behalf as my agent, and when you sell it, I will give you commission. So the company is giving the voucher at 5,000 only. It is not giving at 4,500. And the distributor further gives it at 5,000, they further give it at 5,000. So everybody is giving at 5,000 only. But because the agent is getting some customer, the agent is given at the end of the month some commission. Now, this is a common model. Same thing happens in all other businesses where the agents are getting you the clients or customer or business. On the basis of the turnover, you give the agent some 1-2% commission. Same thing happens here. Now, in this case, when all these distributor, sub-distributor agents are not selling the voucher, they are just passing on the voucher, or they are getting the customer to the Sodexo company, and the Sodexo company is giving them agents. So I'll tell you how this model works. So all these Sodexo companies, what they do, they appoint field agents. These field agents will come to your door. You would have found agents like this. They come to market anything, like they come to market some travel companies product. You take the membership of this travel company, so in a year you will be able to go to so many places, and such big hotels are covered. You will be able to go to 6-star 7-star hotel, etc., in that one membership amount. So similarly, they come to big corporates and they say, see, I'm a representative of Sodexo. If you buy the Sodexo voucher, you can give it to your employee, customer, director as gift. Or if you want, I can give you food vouchers, which you can give to your employees, which is compulsory by law. So that agent makes a tie-up with particular corporates, and it gets Sodexo company such clients. And then Sodexo company directly sells the vouchers to the final ultimate corporate. And for arranging this transaction or for getting this customer, the Sodexo company is giving some commission to this agent. In this particular case, what is the tax treatment? Now here, what is the difference as compared to above? In above, the same Sodexo voucher was being sold, Sodexo to distributor, to sub-distributor, to agent, and to agent, from agent to the final company. Here, these people are working as agents, where company is not selling the vouchers to them. Company will be selling it to the final customer directly. But these people are working in layers to get customers for the company, and for which the company has fixed up some margin which it is given. Now, in such cases, what happens? The transaction between the voucher issuer, that is the Sodexo company, and its distributor, sub-distributor, are on principal agent basis. These transactions, as per contract terms between the distributor, sub-distributor, via voucher issuer, may specify a set of obligation on such agents, such as marketing and promotion and other related support activities for distributing the vouchers against a commission or fee. So the company may decide some obligation that what these agents have to do. So basically, they have to do marketing and get customers. And against that, they will get some percentage commission. In such cases, the distributor, sub-distributor do not operate autonomously. They do not purchase and sell the vouchers. They do not own the vouchers. They only pass on the vouchers as agent. Now, in such cases, GST will be applicable on what? On the commission. So here, the commission that these people are earning by getting Sodexo the various clients, that commission is chargeable to GST. What would be the GST treatment of additional services such as advertising, branding, co-branding, marketing, promotion, customization service, etc., etc.? Now, what is this? Nowadays, see, there is business in everything. Now, what is this? Now, when I'm printing a voucher, like you get a railway ticket, you get an electricity bill. On all these things, you have some company's product which is being marketed, branded, etc. I'm sure you all would have seen it. Forget about that. Go to any of the social media, Facebook or Instagram. Over there also, you will see ads. You open any news channel. While the time the news reader is reading the news or showing you various visuals, there is some caption going on, there is some ad being flashed. So now everywhere, everything is used as advertisement. Now here, the point is the voucher is having some advertisement printed, whereby the voucher issuer is charging some amount to that person whose advertisement is there. Now, this is very common what I'm telling you. Nowadays, when you online, you go to an app, that app is having multiple advertisement of products so that when you're on that app, you see the products and you buy from there. So here, the products who are putting their advertisement on the voucher, they will be paying some amount to the voucher issuer, that is the Sodexo in my case, so that their products are getting sold because through Sodexo vouchers, their products automatically get marketed, highlighted. In such cases, whatever the Sodexo company charges to them, which may be called a service fee, service charge, affiliate fee, or anything for supplying such additional services, which is of marketing, that is chargeable to GST. What would be the GST treatment of unredeemed voucher? This is important. What is unredeemed voucher? I come back to my previous example. I gave you 5,000 rupees West Side voucher so that you can go and buy a gift for yourself. But this voucher had come with some date that this voucher is valid, we call it as the validity date, is valid up to 31st of December. I gave you the voucher, you still have around 45 days, but somehow you missed and you forgot to encash the voucher, utilize the voucher. Now the question is, West Side has already got the money of 4,000 rupees, 5,000 rupees of the voucher, but you did not turn up to utilize that voucher. And now the voucher is expired. So after 31st December, if you go, West Side will say, sorry, this voucher is now only a piece of paper. You can throw it off. Now in such cases, whatever amount is collected by West Side, for which now West Side is not going to sell any goods or service, but it will directly become its profit. This is not leviable to GST. Why? Because as we discussed, voucher itself is neither supply of goods nor supply of service. Yes, had you purchased any goods or service by using the voucher as payment, on the goods service GST was applicable. But here nothing is purchased. The amount of the voucher itself has become non-redeemable and hence there is no supply involved. Since there is no supply involved, there will be no GST on this amount. So there is no supply of good service involved on account of such unredeemed vouchers. Unredeemed why? Because now the time period is elapsed, so it cannot be encashed. So the value, whatever collected, will be a direct income. Direct income means it will be shown as income in the P&L by the West Side, but there is no tax. Please understand. GST has nothing to do with income. Yes, income tax will be applicable. But when we talk about GST has nothing to do what you have earned, received, etc. It depends or it links itself exclusively to supply. So again, we refer to the same circular which clarifies that agreement to do or not to do something should not be presumed to exist and there must be an express agreement. So here, if the voucher expires, that cannot be said that you have not done something and so that is also supply. So all these things will not apply and therefore there will be no GST applicable on the unredeemed voucher. So considering the principle laid out in the voucher in the circular, it emerges that where the voucher is issued for the purpose of redemption for a supply of good service and there is no express implied agreement overall written between the issuer of voucher and redeemable or payment of any amount of charges by the redeemer to the voucher issuer in case of non-redemption of voucher, it cannot be considered as a supply. Therefore, therefore it appears that amount attributable to non-redemption would not constitute as a monetary value of any act, forbearance, etc., and therefore it will not be a supply. So this is an interesting part which is clarified relating to vouchers. So now effectively in the entire voucher gamut, only one thing will be attracting GST, that is where Sodexo company is selling its voucher through its distributors, etc., who act as agents, not on principal to principal basis, then whatever commission it gives to those agents, only those commissions are eligible or liable for GST. So for all this, you need to refer to the definition of good service so that you can understand whether vouchers are covered in that, and then voucher and money definition and actionable claim we have already discussed above. Specified actionable claim, which is taxable. So out of all actionable claim, only specified actionable claims are taxable, and specified actionable claim includes betting, gambling, casino, lottery, online gaming, etc. Now, going to the next topic, a very important one of ITC. Now for ITC, again, recall, there are three broad sections, 16, 17, 18, though there are others, but these are the three main sections. 16 talks about the conditions which have to be fulfilled in order that you are eligible for ITC. This is what is section 16. 17 is scenarios where ITC will be either completely blocked or it will be allowed proportionately, and proportionately you have to reverse. And 18 talks about ITC availability or reversal in some special circumstances. So this is how the entire ITC chapter is framed. Now, when we talk about this ITC chapter, there is section 16, as we discussed, which talks about the eligibility of ITC subject to certain conditions. In that 16.1 says the basic eligibility criteria is person should be registered. Then comes 16.2. 16.2 puts multiple conditions. Condition A is that there should be a valid tax invoice. Double A is supplier should upload the invoice in his GSTR1. It should appear in your 2B. Then you have B, which says goods services should be received. Then next condition that it should not be blocked under section 38. Next condition, supplier should have paid tax and you should have filed the returns. Now in all these conditions, there is one practical challenge relating to 16.2b. What is this B dealing with? B was dealing with the scenario where conditions that ITC will be allowed only when goods or services are received. So 16.2b is the condition for receipt of goods service for allowing ITC. Now, what is the practical scenario? The practical scenario is with relation to automobile sector. Now, what happens? There is a contract between the automobile dealer and the original equipment manufacturer, which is generally X works contract. And as per the terms of contract, the property in goods passes to the dealer at the factory gate of the OEM. So OEM is basically the Tata company, the Hyundai company, the Honda company who are manufacturing the cars or the vehicles. And let us say I am the dealer who have taken the dealership of Tata company. So I've opened a whole outlet where I display all the cars. I have salesmen who explain to people the features of the cars, the various benefits, schemes, etc. And then people come and book the car. Now, when I purchase these cars are purchased on X factory X works basis. What is X factory or X works basis? So in this X factory or X works basis, let us say the car manufacturer's factory is somewhere in Haryana. I am sitting in Mumbai, Maharashtra. When it is an X works contract, so effectively what is happening in X works contract? I am taking delivery at the factory gate of the supplier of the car manufacturer. So, in the eyes of Contract Act, not GST Act, in the eyes of Contract Act, the sale is completed at the factory gate of this company, that is the car manufacturer, because I have purchased the goods on what basis? X works basis or X factory basis. So the car becomes my property, not when it reaches my dealer uh, dealer premises, but at the factory gate of the Tata company itself. So, and as per the terms of the contract, the property in goods, that is vehicles, passes to the dealer, that is to me, at the factory gate of the Tata company. When the goods are handed over to the transporter, whom I have sent, and the delivery of the part of the OEM is completed at his factory gate. So I have ordered 50 cars. I have appointed a transporter who will be bringing these cars. The transporter goes to the Tata company. Let us say it is in Haryana. And from there, once these cars are loaded, in the eyes of law and as per my contract, I have the property in the goods are transferred to me. That is, I have purchased the goods. Now the goods are mine at that place. So the goods are still not reach in my factory, or sorry, not in my factory, in my dealer office. But as per the contract, as per the terms of the contract, at the factory gate itself, the goods have become my property. Now, what is the issue? Now, it may take, let us say, some 8-10 days for the goods to reach me because of the distance involved and traveling and all involved. Now, let us say in this period, the month changes. So, let us say my this vehicle had loaded the cars from the Tata factory on 25th of November. Then when it starts, it reached my dealer office on 5th of December. Now, the main issue is on which date it will be said that the condition of 16(2)(b is satisfied. What is 16(2)(b) condition? I am eligible for ITC on the date when I receive the goods. Now, the question is whether received means received there, that is on 25th of November, or received means received here, that is 5th of December. It will create a difference of 1 month. In some cases, it may be 2-3 months, depending upon the time involved in transport. The transport may be arranged by the OEM on behalf of the dealer, and where insurance is done, it may also be done on behalf of the dealer. Any claim in loss has to be lodged by the dealer. So whoever arranges the transport, since the property in goods has passed on to me, the goods become mine at the factory gate. Generally, I arrange the transporter, but it may even be the Tata company who, on my behalf, arranges transport. And most important, insurance is in my name. So if anything is happening, the insurance company responsibility. Now, issue which arose for consideration was whether ITC can be availed by the dealer only after the vehicles are physically received in my premises, or it can be availed on the date when the vehicles are billed to him and handed over to the transporter. So this is the particular example, whether 25th November when the cars were loaded, or whether 5th of December. In short, we are trying to understand and interpret when the goods are said to be received by me at that place, when it is given to my transporter, or when it actually comes to me in my office, in my dealer's premises. So for this, what does the law says? In such scenario, the property in the goods can be said to have been passed to the dealer by the OEM upon handing over of the said goods to the transporter at the factory gate. So, since the goods have become my property, and since the transporter who is taking the delivery there is doing it on my behalf, so he's acting as my agent. And when you give goods to my agent, it is as good as you have given goods to me. So, as per the interpretation, the property in the goods passed there, goods were given to my transporter there. So it is that date, that is 25th of November, we will say that I have received the goods. So in such scenario, the property in the said goods can be considered to have been passed on to the dealer by OEM upon handing over of the said goods to the transporter at factory gate, meaning thereby the goods can be considered to have been delivered to me through the transporter by the supplier at the factory gate, and the supply of goods can be considered to have fructified at the factory gate, even though the goods may be physically received after the transit period. So this is what is clarified here. So accordingly, it is clarified that as per explanation to clause B of section 16.2, the registered person, that is me, can be considered to have received the goods at the time of such handing over of the goods by supplier to transporter at his factory gate for their onward transmission to the said person. So the date when it is given there to the transporter is the date of receipt. The same principle applies in respect of supply of other goods also, where contract between the supplier and recipient is X work contract. And as per the terms of the contract, the goods are to be delivered by supplier to the recipient or to another person, including the transporter, on behalf of the recipient at the supplier's place, and the property in the goods stand transferred to the recipient at the time of such handing over. In such cases, the said goods can be construed to have been received by the said person at the time of handing over of the said goods to the recipient or transporter, as the case may be, as per the provisions of this clause. So the date on which the goods are given to my transporter, it will be deemed that I have received the goods, and hence it will be deemed that 16(2)(b) condition is satisfied immediately, even though the goods are yet to reach my factory or my premises. Now here, students, what is important? Why this confusion was there? Because we have shifted from old regime to GST regime. Old regime was the service tax or excise regime. Now in that regime, if you read the definition and if you read the conditions which were there for allowing SENVAT credit, like how we have today input tax credit, at that time, the credit was called as SENVAT credit under excise and service tax. Now over there was a specific condition that the goods should be received in the premises of the dealer or in the factory of the manufacturer. That was a very specific condition mentioned in those laws. Since that was a specific condition mentioned, hence, over there, in the same scenario, in the present scenario, what we are talking about, let us say the same contract is there. I'm getting the property of the goods. Once the goods are handed over by Tata company to the transporter, the property in the goods passes to me, it becomes my goods. But since in the earlier law, the requirement was that SENVAT credit is available only when the goods are received in the premises, in the factory. Hence, in the same case, in the old law, ITC was not available till the goods reach your premises. But here in GST law, in 16(2)(b), there is no condition that it should be received in the premises. The condition is only that the goods or services should be received. Where is not specified. So since where is not specified, hence it will be considered as received at that point itself. It is also mentioned that as per the provisions of 6.1, a registered person is entitled to ITC only in respect of supply of goods, service which is intended to be used in the course of business. Thus, if the goods are found to have been diverted for non-business purpose at any stage, either before physically receiving the said goods at his business premises or later, the registered person shall not be entitled to ITC. Further, if at any time after receiving the goods, such goods are lost, stolen, etc., again he will have to reverse the ITC. So if I have diverted the goods, then ITC will not be available because then I'm not satisfying the basic condition. So even though it is received, but since the first basic condition 16.1 is not satisfied, I will not get ITC. Or if after receiving the goods, they are lost, stolen, etc., then again I have to reverse the ITC as per 17.5. So this is all. I'll just take up the query which is put in by Subhashini Leela. Question is, in case of warehousing provision, if order permitting deposit is given on 21st May, okay, then period ends on which date? In my calculation, period of 90 days ends on 18th August. It is correct. In answer, okay, I'll tell you. See what happens, beta. 2, 3 points have to be considered. So I'll tell you how 90 days are to be counted. Firstly, the date on which you have deposited is to be ignored. So you count the date after ignoring 21st May. So let us count. So in May you have 31 days. 31 minus 21, so it is 10. So May 10 days, then June 30, July 31. So how many days have happened? 10 plus 30, 40. 40 plus 31 is 61. Correct? Now you want 90 days. So 90 minus 61. What is left is the answer. Correct, beta? I hope you understood this point. How to calculate. So I think you are counting 21. So you are getting 18. You have to count after 21. So it is coming exactly 90. Yes, is it clear, Subhashini? Perfect. So students, we stop over here. The next class would be our last class. We will be completing our portion then. So again, I'll request if there are any open queries, doubts, please bring it to the next class so that we can complete everything along with your queries and doubts. So with this, I close today's session and please prepare and come for the last session, which will be the next one. So thank you very much. Thank you for the day. Take care. Good night. Yes, Manishji. Thank you. Good night.